All right, we're about to get a short signal again. So just a recap of the last two videos real quick. We took this high right here, we took this low right here, and we have concluded that we are at a 50% retracement level as far as the Fibonacci extension is concerned. Please ignore my bird. She's being real loud this morning. We're looking at a lower swing high that is forming right here, and we're looking at this candle's low as a trigger point to short this thing down. Does it mean it's going to go down far? Well, if you got your A, B, then you could potentially have a C wave down, which is kind of what everybody's expecting, and it's the way this is setting up. So this is what we're going to follow on. So we're literally getting a short signal almost right now. We want a little bit more movement here. Let's go to a 5-minute chart. Once again, though, these are our important Fibonacci levels right here, 50 and 61.8%. A move down like this, if it's going to continue down, it's going to be retraced maximum 61.8% usually, but usually between 50 and 61.8 before it heads down. So as we approach this level, we were looking for this new lower swing high from this swing high. Okay, so swing high, lower swing high, move down. We drew this line here on a 5-minute chart. Let me jump back to it real quick. Looks like we currently are finding support on it, okay? But when we break this level here, let's see here. I don't know why that line is right there. We're going to move it over here. We're going to kind of take it right about, there's the level really. So really we're through it right now, okay? Because it's a prior day's high that we're looking at. But what I want to do is come off it just a tad. Prior day's low, I'm sorry. I want to come off it just a tad and then jump back to the day. And I'm not looking for, I'm going to hesitate here, okay? I'm going to, we want it to push out of here just a little bit, just to know that we're clear. If this thing sat here and kind of wobbled for, 5 minutes and the next one opened here, I'd probably be looking at getting in. But this is, we want to consider this a zone. And if you're going to consider it a zone, let's see here, then we would be looking at, potentially here as the low part of that zone. And then potentially here is the high part, right? Ballpark. So once we break out of this zone, that's when we're clear. And there's no real rush to get in as pennies break through the zone. We want to see a little bit of a move, okay? The only thing that we want to do is we don't want to get too far away because we want our stop to be as close as possible. Let's just say in here if we enter here, right? Because we want our stop to be as tight as possible, and we want this zone to be a barrier between that stop and that entry. So that's kind of what we're looking at right now. So back to a daily chart. So we have our high, higher high, lower high. This completes our swing as long as this candlestick, of course, closes below the open here. We've got a completed swing. We've got basically a 2-candle break. There's 3 candles in the swing. We're going to use the low of this middle candlestick in this case as the entry area. But we want to see that candlestick kind of make a nice push down and know that we're clear of this area. Doesn't guarantee we're not going to move back up into it, but it puts the odds more in our favor. And then we want to stop between our support, which becomes resistance, and this kind of acts as a fence between the two, guarding our stop from price coming back. So once again, folks, we are at the 50% retracement level. This is the huge move down. Here is the correction, which is about 50% of the move. So in a sense, the market has recovered pretty much 50% plus since the crash down, but that's what's expected with a move like this because price doesn't move in a straight line. It moves in zigzags. So here's your first push. Here's your zig. Next is the zag if price is going to make its way down. There's no setup for bullish. If we began to do some weird stuff here, we could look at this high next as an entry long, but that's probably not going to take place today. And if it did, I'd be shocked. And if it did, it would probably be short-lived because of the ceiling right here. I'm going to call this a ceiling for now because it still represents a 61.8% retracement level. I'm still pretty bearish with a move like this. And I'm still pretty bearish immediately also with a retracement like this. This is overextended to the upside, and a move down is anticipated. So I'm not going to trade a breakout of this high, and that's why I say our only opportunity to trade is downward right now. Okay, unless this thing matures in a way that I can't see happening just yet, there is no bullish trade on the table. Unless you're a day trader, of course, then you can do anything you want, because a move from here to even here could be profitable on a 5-minute chart with the right option, right? At any rate, here's kind of what we're waiting on right now. And let's look at the Dow Jones Industrial Average real quick. Same kind of deal here. We're pretty much just about ready to go. We've got this low, which is a little tight. We'll go about right there. This thing gets a little move behind it. We've completed the swing, and we can short the Dow. The Dow's a little sloppier than the SPX, but we still have the push down. So this huge retracement, but there's this big down day in there, which kind of relieves some of the pressure. We do have a big gap up, and we're up at the 61.8% retracement level, which makes it, even more so that this is the top of the retracement. So here's a good opportunity as well on the Dow, which means you can begin looking at stocks that look similar. That looks similar to this. Darn it. I don't know why we're doing that, but we'll just stop. We can begin to look at stocks that look similar to this. So there's your assessment. There's what's taking place. There's some markers for going short. Trade at your own risk, and hope you enjoyed that. I'll keep following this market, maybe not every day, but probably in the next few days, and try to kind of explain to you what's taking place. All right, guys, thanks for your time. Bye.